Welcome back to another episode of the Anatomy of the Trade. Today we're discussing one of the trades that was sent to us by one of the students, and that is trade, or actually a couple of trades in Bitcoin, and that was sent to us by Aaron W. Okay, so let's look at the trades. And Franz, you kind of reposted these trades on this big chart, and you are showing us where those trades happened structurally. So please tell us where the trades have happened.
Okay. Well, first of all, thanks a lot, Aaron, for sending this in, and it's really a great trade, which I think we'll see when we get to the actual trade breakdown. But this is all the way back starting in 2015, starting in late 2015, and through July is the period I think that Aaron was working with. And if we look at this, we've got this sell-off into 2015, and in Aaron's notes, I believe it was because of one of the exchanges, I think it was Mt. Gox was the name of it, got into some trouble, and there was a big loss of confidence in Bitcoin there for a while. But if you look at this very classic accumulation structure, sign of the initial selling climax occurs. There's a definite change of behavior, and this is a weekly chart, so it's not as easy to pick up. But in phase A, you can see the secondary tests. Volume, interestingly, through the early part of this trading range is pretty elevated, and there's quite a bit of kind of duking it out, the battle between supply and demand, buyers and sellers happening early in this trading range. And interestingly, as it progresses, so after about April, after the first kind of major retest of support, you can see that volume is starting to dry up. And then what happens next is actually demand, which is less, but in July pushes us up into a slight upthrust area, and into the spring, there's into phase C, the spring that occurs in phase C, again, supply sort of dries up except on that very last week, and sort of typical capitulation. So here's right where in this green rectangle is where Aaron is totally focused, and he sees this accumulation pattern, and actually right at the spring, and we're going to jump to a shorter, smaller time frame here in a minute to see what the trade actually happened. But this entire initial sign of strength rally, and look at the volume characteristics. I mean, you can see there's a tremendous amount of buying interest. Clearly a nice breakout, and but pretty climactic action. So right into that sign of strength, playing it great, running this whole upswing is his trade. Do we want to look at that next, or do we want to also talk about the short?
Definitely let's look at the trades themselves. We're going to do this, but this is a really good perspective for us to understand where the trade has happened relative to the whole price cycle, right? So here's the price cycle. It went like this. So Aaron is initiating trade number one off the low in their regional accumulation. So the couple of questions here to Aaron and for us to think about. If this is the low, if this is a long-term low in the price cycle, then is there an opportunity for us to conduct a campaign trade? So that's the question number one that I would be asking. If we are swing traders, and I don't know, we probably should have asked Aaron about this. So swing, if we're swing trading, then this is just like a perfect swing trade that we have in this green box right here, and a perfect trade, also on the backing up action. So structurally, trades have happened in the correct places with the correct understanding of what's going on. And I think Aaron has mentioned to me that there are some other trades, but he wanted just to show this too. So this is the only question on this chart that I have. Are we companion or are we swing trading? So let's look at this swing trade right here. And I think it's quite remarkable, the way how it was conducted, because out of the sprint position, we're going into the testing action at the higher level. There is a trading range here on its own. And then look at where Aaron is coming in. He's coming in after the reaction, which is very impressive. It's much harder to do mentally to initiate the position after the reaction or on the reaction, and then just holding, going into the climactic run of the sign of strength rally. And you want to catch when momentum is starting to increase, almost exponentially, right? So there is an increase of the momentum here. There is an increase of the momentum here, but it's not as dramatic, and we're still trying to overcome the previous highs here. But this is something different. I mean, there's 3 bars here on the dailies, 3 days where it just goes up, 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 and it's just so dramatic. And look at the dramatic climactic volume signatures. So the point of exit is perfect. So this trade as a swing trade is just perfect. So I don't know, friends, if we need to discuss anything in the post analysis. I
Let's
mean,
just give him 100.
I know, yeah, it's 100%. So um, questions here. So again, I said that the correct structural spots in the price structure, the correct structural spots relative to the phase analysis, the correct points of interest relative to the test of the spring, the correct exit based on the climactic characteristics. So everything is just like variance is 100% here. The only question, Aaron, that I would be asking here is, did you have any add-ons as the price was going up? So let's kind of, and we don't know the answer to this, but let's kind of look at where potentially Aaron could have added here. So Franz, where do you think are the add-on spots?
Well, okay, so what we're waiting for initially is some sort of a commitment, because he's buying very, like you said, very gutsy move on the test. And I think that where you've got that the resistance of that little trading range, once there's an ability to commit above that, I think that would be a logical place for an add-on.
Okay, so if this is point of entry number 1, could be point of entry number 2 here, I would be thinking that, and you think, any type of reactions, basically, or after reactions you want to enter. So something like this, and this is going to be more on the intraday basis. I probably would not be thinking of adding here. Why? Because we're hitting the resistance here, and the probabilities are developing in favor of a change of behavior reaction that comes here. So you want to start protecting your positions here. So I would be just gradually increasing the size, and there are quite a few spots. It's not just after the reactions, but all of them right here will be some spots to start adding a more sizable position and just playing this more aggressively as the price especially confirming the whole exit. Okay, so second trade. I think second trade also is somewhat perfect or close to that. But even on this chart right here, my first question would be, yes, we're looking for the failure here as an indication that we could initiate this trade to the downside. So this trade is actually a short. Aaron, I was thinking a lot about this when I first saw your chart. And I was thinking, well, how would I play this? I mean, like, definitely here, that makes a lot of sense. But you also have to think that this trade is going to be somewhat limited. Why? Because of the sign of strength to the larger formation that we have had. and also because of this rally that shows actually some strength and some buying, and that is suggestive of the long-term continuation. So you're playing the reaction here that is somewhat limited, so you have to be extremely precise, and you were. So this is awesome. But I was thinking, how would I play this? I probably would be recognizing climactic actions. I actually love this type of trades. Our video from a week ago kind of shows you, how I would do this, with the stocks that are climactically running up, and you want to catch like that last exhaustion move, and short it there. So I wonder if you could think about this trade right here on the actual change of behavior, which is a somewhat better trade than the one that is a confirming trade and into the higher low. So, and I'm nitpicking here because again, the trade is actually really good. So let's look at this trade. So Franz, what do you think about the points of the entry for this trade that Aaron has?
Okay. Well, his initial entry, which he's got indicated with that first green arrow, he's expecting a reaction down into the lower part of the trading range. And he's got this first sell-off where he's showing as a sign of weakness. We've got a reaction from that, and he waits until it looks like momentum starting to peter out a little bit. Early 2016 is the date stamp. Volume's drying up, and he enters here. And then he said what happened was that there was a higher low, and it wasn't ready to move yet. So he got out. He doesn't actually show it here, but he got out before the upthrust that he's labeling as an LPSY. So somewhere in there is where he exited the first time. But his mental state was great because he still is recognizing this as a potential distribution even on a short-term basis, and he goes right in again after the LPSY, after that effort to thrust up. You can see the sign of on that rally. Look at the volume increases, and then there's just no ability around between the fifth and the 11th on those 4 up bars. When you see that, you want to see the result of this effort as a continuation, and instead we aren't quite able to penetrate the previous area, which of the buying climax. So as soon as we start backing off, he sees this and still looking at a distribution, enters as a sale, and then covers after the very rapid high momentum climactic sell-off. Great timing. What
Yeah,
do you say?
I think that this is still a very, very good trade. I mean, I have some thoughts about this point of entry, so we'll talk about this in a second. But let's talk about the exit first. I think it was nailed. Aaron nailed it. Why? Because because of where the exit actually has happened, but also characteristics of the price and volume action at this point of time. So what do we see? We see the volume spike that is resemblant to this volume spikes. And what does happen when this type of volume signatures come in? There is some stopping action. So there is another stopping action. Also, I like the whole recognition. There is no chasing a much more extended reaction here just based on the overall big structure that we've discussed, right? So this was, we don't see this, but to the left, there is a major sign of strength. And currently, this whole price action is just a part of a major backing up action. Within this major backing up action, we have a short-term reaction that leads to a higher low. So you have to keep all of this in mind, kind of like a multi-layered analysis right there. Okay, so now coming back to this entry. So this is something that definitely could be improved on multiple levels here. As we come in after the climactic action and we create a change of behavior, we're expecting a trading range. That's the whole assumption here. As we go and retest the highs, so we're going to say that we are ending phase A, and then we're going into phase B. So let's talk about phase B. Usually phase B is going to have two parts to it. It's going to have kind of like a volatile part that is going to be somewhat similar to phase A. This is where still volatility of the buyers and the sellers are being shown in big price fluctuations, and that's the whole attribute of this first half of phase B. Now, the second half of phase B, which is right here, so here's our second part, is going to show exhaustion by both buyers and sellers. And it's going to show, because of that, some inactivity, which is going to be shown in the volume signature decrease. And usually that type of volume signature decrease leads to some kind of what I call a technical rally. This is the rally by weak hands. And usually that rally, into the end of this rally, we're going to have phase C, and we're going to have the second point of excitement by weak hands. And you could see all of this on the chart. So where is our second point of excitement? That's this rally. So my whole, premise here, for waiting is just to experience this second point of excitement into phase C, and then look for exactly this point of entry right here. So that's the only thing that I would, be thinking here in terms of this entry. Another way of thinking why this was not the greatest entry is just because of this low. Because this low shows stopping action and it stops slightly higher than this low right here. So what does it mean? Even though effort has increased tremendously to push the price down, we are actually not expanding the result to the downside, which is the key, and that suggests a rally. So we don't want to short the rally until final climactic characteristics, which might be a little bit confusing. Maybe we're thinking here, well, this is the rally and it's just not that strong. But again, the stopping action itself, if we would have had a sign of weakness here, which would undercut the previous low of the automatic reaction, then I think it would be a much more legitimate, thinking here to enter on this type of character of the rally. So these are the only points. But other than this, again, a really great trade. Franz mentioned, emotional capacity to come back. A lot of the traders would not be able to come back to this trade right here, just because they would be burned out by this entry. So that just shows much maturation, as a trader. So let's go through this, Franz. So bias is definitely yes. Timing, so shall we put 50-50?
Sure.
Okay. Character, yes. A point of entry, 50-50. Stop loss, well, we don't know exactly where. We're going to assume that stop loss is developed. Well, add-ons. So I only see maybe right here, and you could add on just on the breakout here. So that wasn't done. So, but I'm not sure if this was an intention. So let's just skip this and exit. Most definitely yes. So we have out of 6, we have 1, 2, 3, 4, 5. Okay. So this is 83% variance. Okay, and Franz, what are the comments here that we could give Aaron?
Well, I really liked your kind of review of the second point of excitement that occurs in a distribution / redistribution. So I would definitely put that on a note. And the alternative is in an accumulation, there's a second point of fear, but as always wait for that number 2, confirmation that we're looking for. So that would be the biggest takeaway, because otherwise I just think, I
Again,
think,
perfect. Yeah.
yeah.
All right. Well, I think this is it for this episode of the Anatomy of the Trade. Aaron, thank you so much. This was a great submission. Send us more. And for those of you again who are interested in the analysis of some of your trades, and by the way, guys, you don't have to send us just perfect trades. Send us any trades. As you could see, both Franz and I, we show you kind of majority of the trades that we go through, and a lot of them, have a lot of mistakes. It's from the mistakes, from the analysis of the mistakes, because as we analyze our mistakes in trading, we analyze our behaviors in the marketplace. And what's important is to understand how do you behave in the market. Are you, misanalyzing? Are you misconducting yourself in the marketplace by, let's say, getting into the position too early, too late, placing the stop loss incorrectly, or moving the stop loss incorrectly, not adding to the position or adding at the incorrect places, exiting at the incorrect places, and so on and so forth. So you have to know yourself and your trading to the point where you will be able, with that awareness, change your behaviors and be a better trader. And with that, thank you so much for watching. Franz, thank you.
So much truth in that, Roman. Thank you.